Hello, it is Fed Day. Welcome to the Brent Bruce Daily. Today is the July the 27th of 2022. The highly anticipated announcement by the Federal Reserve came out today, and they did increase the federal funds rate by 0.75% today, which was highly anticipated and basically what we expected. So you now get to tell all your friends and family that home loan interest rates went up 0.75% today, right? Well, no. If you watch this show regularly, you know that the Federal Reserve increasing the federal funds rate does not directly affect the home loan interest rates. In fact, the last time that they increased the federal funds rate, mortgage interest rates went down. Now, we also expect that because they increased the federal funds rate today by 0.75%, as we've been talking about for really the week leading up to today, that we expect home loan interest rates will go down further. Now, there's usually a knee-jerk reaction, some movement very quickly, and then things settle down. But I really do think that we're going to have a good run here for the next few days because the Federal Reserve is being aggressive in trying to fight inflation. Now, again, this was highly anticipated. Some of this was already baked into the market, but once it was actually announced and basically secured, then we were able to see the effects in the equities market with the Dow Jones, S&P, and the NASDAQ, as well as now into the bond market here in the mortgage-backed security, which we're going to jump over to in just a minute to see what that's doing with our home loan interest rates. But I wanted to show you a couple things that was kind of interesting. Jump over to the front page here of the CNBC. The announcement is now really the third title. This is number one, this is number two, and this is number three. I mean, talk about highly anticipated. It's been, an hour and a half, and it's not even the real title right now. It's not the headline news. It's already dropped down to basically number three. While, again, the Dow Jones rallies, the S&P is up 2.6, and NASDAQ is up 4. So the NASDAQ is loving it. Mortgage-backed security market is up 42, which is excellent. That is what we wanted to see, and we want to see it go a little bit further. So we're going to jump over here. We're going to go a little bit further into what's happening with the home loan interest rates. We have now, because of this news, because of the inflation fighting news of the Federal Reserve increasing the federal funds rate by 0.75%, them increasing their rate, home loan interest rates are moving down. So we have now moved over our 50-day moving average. We are over our Fibonacci level at, 1055, 1057. And now we are moving up. Here we are here, coming up against this Fibonacci level here that we're probably going to have a hard time getting through, which is 101.23. This is where we bounced off of that ceiling last time. And remember, we were talking about a 4.99% with no points with my company, Rancho Capital, at that point on a standard conventional 30-year fixed. So where are we right now? Let's take a look and see if we've already felt the effects. I'm going to go over to the Brent Bruce Daily scenario that we look at each day. This, again, is a highly qualified 30-year fixed conventional loan. We're going to go ahead and take a quick look at the breakdown of what this scenario is. So if anybody has any questions from compliance, they can see what we're looking at. We're going to go ahead and submit this and see where home loan interest rates are at this point. So we are right now at 4.99. We're the same as we were yesterday, all right, about exactly the same, 115 in credit. I think we're going to probably see an intraday reprice. We'll probably see interest rates get a little bit better. I don't know that we're going to drop down to the 4.875, but we'll probably see this credit increase today. And if things go well and tomorrow we open up in a positive territory, in green territory, we might see that 4.875. And if things go really well over the next week, I think we might see somewhere between 4.5 and 4.25. But again, I always want to point out, this isn't just a sales pitch. You're not going to see these interest rates probably from your traditional mortgage banker. Their rates are about 0.5% higher than ours because of the way that we've structured ourselves and with our margins. So that is where we are right now. Things have really improved here in the mortgage-backed security market. What we expected to happen did happen, and the result that we expected is now happening. Let's see if we can break above this 101.23. Now, one other thing I wanted to point out, because I just think it's kind of funny. is the Federal Reserve, after they made their announcement, they get in here and there's all kinds of comments that they make about what they've noticed about certain parts of the economy. And I thought this was pretty interesting. And this is where I think the Federal Reserve is kind of just slow to picking up on why things are what they are. Now, for instance, right here, it talks about the Federal Reserve right now has the federal funds rate at 2.5%. Their goal is to have it at about 3.5%. So we do expect, not in August, but in September, another increase to the federal funds rate. And then in October, another increase to the federal funds rate. Probably a 0.5% for each of those, depending on what is going on with the economy. So again, if you want to kind of start to, handicap what you expect to happen in the future, that's what I'm putting out there, what I think is going to happen. And we'll probably stop after the October timeframe if we're seeing inflation subside. You're not going to see inflation subside for the next 2 months because of the way that the reporting works. It's almost guaranteed that inflation numbers are going to get uglier before they get better. All right, so keep that in mind as well. So I thought I would point this out here that it says, this is interesting. It says, where are we at here? The highest in November rate, with the rent index at its highest level since April of 1986. So the rent index is obviously high. We all know that. But this is what I thought was funny. And the dental care costs hitting a record in data series going back to 1995. Why is dental care now such a huge expense? So much money is spent on dental care. Do we know why? Well, yes, we do. Because of a thing, there's a company out there called Care Credit. You probably know what I'm talking about. The dental industry figured out a way to finance dental care. So they basically now at their desk, you walk into the office of the dentist. It used to say, hey, can I take your insurance? But now it says, can I take your insurance? Oh, and by the way, here's a credit app to pay for the rest of your dental care. Before, they had to try to keep it affordable or at least within your insurance. Now they figured out how they can make dental care way more expensive because you can finance it. I mean, doesn't it make sense to spend $50 a month to have clean, straight teeth? Well, easy sell, isn't it? And think about orthodontia. So these days, when a kid turns 12, it's like you head into the orthodontist and you spend $5,000 on, some orthodontia and getting some braces. And it doesn't matter if you have money or not, because Care Credit or some other type of credit provider is going to pay for it. See, that's where I want to see the real numbers. So you see that the expenses are here, but let's back this with how much debt is being incurred to cover the highest dental care costs since 1995, right? These are the things that you need to look at as you start looking at statistics and economic numbers. It's easy to spend money when you have lots of credit available to you. Anyhow, a little bit of extra for you. Hopefully that is good information. Make sure that you are subscribing, liking, and sharing this information, because we will be moving away from BombBomb soon, and you will only be able to get this information if you are subscribed to my YouTube page. Let me know what questions you have. Hope you have a great day.